Okay guys, thanks for joining us here in the charts. This is the Market Beast. We have the most important gold video to share with you right now. Just two levels that gold is facing. I want to explore this in great detail so that we're all clear that if gold does not get above one specific level, it's likely going down to a lower level that's very strategic as well. So we'll get into the details, guys. Welcome back, loyal family. If you're new here, we explore price action. New subscribers, welcome in. Let's go ahead and dive into these two levels in the gold market here, shall we? So today's September the 16th, 2021, and the current price of gold is $1,755.53, fluctuating. It's down 2.1% for the day. Okay. This is going to be XAU USD, the gold spot market. Okay. Compares it to the US dollar. All right, so we're looking at the weekly format. Super simple to see, guys. Here's the two lines. That's it. You're looking at 1783. I'll leave a link in the video right now, hopefully, so that you can. We did a full video dedicated to the 1783 level. That's the most important level for me in the entire gold market. Seriously, right now. 1622. I'm not sure if the thumbnail suggests that level, but we're going to get into that those details right now. So basically what you're looking at is obviously a blue line, okay? That represents 1783. The red line represents 1622. And what we're looking at is very simple. The white circles represent a breakdown from the blue line at 1783 and successfully meeting the red line, which is at 1622. Okay, and then the cycle just continued to repeat. It bounced off the red line. It came up to the blue line perfectly, 1783. Went back down to the red line, 1622, and got a check mark. So I think you can pretty much see it's cut and dry, guys. When the market gets rejected or closes a weekly format candle below 1783, it naturally goes down to the red line. Whether it breaks below and it consolidates, when it successfully breaks back above that red line, boom, goes right to that blue line. It's almost perfect. Okay, the time frame that we're looking at actually starts back in July 2011. And it stretches all the way over to February 2013. So all this price action in terms of the gold market finding resistance at the 1783 and perfectly going down to the 1622 all took place back in 2011 up to 2013. I think this is worth mentioning because as we scroll over to present day, we'll see that something just happened in the gold market that's actually not perfectly in line with what we just went over. Okay, however, the gold market actually just made a lower high. Now on this channel, we only focus on lower lows and lower highs for a downtrend. And ever since gold went all the way up to like $2,000, it's been walking down the stairs. Okay, so right now it's just kind of teetering near this blue line, which I'm not comfortable with it doing that. But it really needs to get back above 1783. I just want to kind of show you the lower high. Let's go ahead and do the path here. Up, okay, down. We got a low, up, lower high, down, lower low, lower high, lower low. Now we just got a kind of a double top scenario in between these two areas here at about December 28, 2020 at 1900 in comparison to what recently just happened in May 2021. Okay, we got kind of a double top scenario. Okay, however, the market is still in a fair condition as long as it can respect the lows here at about 1690. Okay, so I just wanted to show you that as of recently, although it is a double top, it is technically a lower high, lower than the all-time high and the previous swing high before this double top here. And gold is failing to make higher highs. Okay, so naturally what will happen is the market will seek financial support and attempt to make a new low, lower than the level here at about $1,700. So I definitely wanted to let everyone know that the gold market, although it didn't, if you notice this, the first white circle here, some might be saying, wait a minute, don't you see this first white circle here where it actually did not go to the red line? You're absolutely correct. That's why I have an X there at the 1622 level, because with the exception of what has already taken place in the past, this is actually the only time it's happened where the weekly format actually broke below the blue line and it didn't go all the way down to the red line at 1622. So the gold market, let's be clear, although this has somewhat of a bearish tone, not necessarily a bearish, but it has a neutral tone. I'm just stressing the importance of the 1783 level. It's super important. Like, within the next month or up to 3 months, it really needs to like do some consolidating, whether it's just below or just above 1783, but it needs to do something and prevent the sellers from pushing the price down to 1622, because that's what they're trying to do. All right, if it needs to consolidate near 1783, great. And the go bugs, you guys have better do it, or it's going to get really interesting in this market, and it won't be to the upside. I'll just say that, okay? So right now we have about a day and 4 hours to close on this active weekly candle right now. It is red. That can change over the course of the next day and 4 hours. But yeah, get the gold buyers, guys. You really got to step in right now, seriously, because it's about to get pretty interesting here, okay? Naturally, since the market has been in a downwards trajectory, I realize I said it's in an overall uptrend, because it is. If we just back out here, I'm just kind of talking about the price action, like this very large consolidative phase that took place back in, 2013, all the way over to 2019 in September. Like all this consolidating, it's been consolidating to have that really nice move up. So overall, it's in an uptrend. It's really nice, okay? So I'm just, guys, seriously, the 1783, okay? But if this is an official double top right here, okay, if this is an official double top and the sellers realize that this is their opportunity to move the price lower, naturally you won't see gold get any higher than 1825, and it would just kind of continue to fade out or drop. I'm not sure how big or if this is actually going to happen, but 1783, that is the level. All right. So yeah, let's summarize the video, guys. If gold can't get above 1783 and hold as support, 1622 is inevitable. Yeah. So I'm not sure if you heard it here first, but yeah, this is pretty important for the gold to hold this level tight. All right. That's all I have for you, wonderful folks. Hopefully the thumbnail, again, if it says 1622, hopefully this does not age well, because the gold bugs are not going to like that, right? That's the end of the video, guys. Hopefully you guys we're all clear about the two levels. So we'll see if this check mark, we can actually erase this question mark, make it a check mark. The time frame, again, guys, is 1 month up to 3 months. Let's see how the gold market is going to perform. But you have the critical level, okay? The blue line. All right, so go ahead and leave an appropriate thumb just below the video if you enjoyed the content. If you are new here, we explore the alternative markets, Bitcoin and altcoins. Kind of subscribe with us, hit the bell. We'll send you that when it's available. The engagement truly helps us with the YouTube algorithm, so thank you for all of your support. And that's pretty much it, guys. So take care of yourselves. Execute your strategies. Always be kind. We'll talk soon. Bye for now.